And good afternoon. Welcome into Market Talk on this Monday, April 11th. Thank you for joining us and making us part of your day. Once again, I'm your host, Jesse Allen. Find us online, markettalkag.com. That's our home on the web, markettalkag.com. Find all of our social media links there, all of our streaming sources, the latest news of agriculture, past episodes, so much more. It's all at markettalkag.com. Well, as we take a look at the market trade here today, starting off the week, going in two separate directions in grains, with beans under pressure, wheat sharply higher, and corn kind of caught in the middle. But we're going to expand upon that more and get some more thoughts into why we saw what we saw on Monday. Let's bring in our good friend John Heinberg with Total Farm Marketing joining us this afternoon. John, good afternoon, sir. Good to have you back on a Monday, and really just kind of an interesting day. And my analogy there, corn kind of caught in the middle. Did that feel like that was the case for you today, with wheat sharply higher and beans sharply lower?
Yeah, that kind of feels like the case overall. Corn had a nice start to the morning on the overnight session as well. We got that announced purchase by China again on a mix of old crop and new crop corn. When you pull in 1 million ton sale, that just gets the market a little bit happy in the overall. So we saw that, at least probably some of that overnight strength and early morning strength. But yeah, again, just trying to find some direction. We had just some good weakness in that soybean market, kind of unexplained, at least in terms of news. Probably just a little bit of profit taking here at the top of this. And then good strength in that wheat market today, pushing 30 plus higher, pushing almost 40 higher during the day at one time. Again, as we're watching what's going on with the Ukraine, as well as watching those crop ratings that come out here later on this afternoon.
Yeah, and I think that seemed to be the big news item, was those crop ratings really helping to give us some premium in the wheat market, as traders fearing another bad week of crop ratings. I mean, what was it? The second lowest on record last week, I think, or close to that. So you think about the wheat markets, and you also think about the weather situation. We do have a fairly big system set to impact parts of the country this week. One has to wonder, is it going to do much of anything to help out some of those really drought-stricken wheat areas? It sounds like a lot of it's going to miss the southwestern plains, John.
Yeah, at least seems to be what the forecast models are showing right now. That again, that's going to stay to the north and drift into the eastern part of the country more than anything. Again, just kind of missing that region. So we'll see if those crop ratings come out. I know things were very difficult in some of those areas last week with strong winds and warm temperatures, things that we just don't need when the crop's already struggling and the ground's already dry. So I anticipate some of that was the buying going in, as well as, again, just concerns what's going on with the Ukraine, some escalations or potential escalations of tensions continuing to go. Ukraine was basically telling people in the eastern part of the country to evacuate, fearing things could get even worse. Market put a little bit more war premium back in on top of that. So right now, even though things maybe in terms of the demand side aren't quite there for U.S. wheat, there's still some pretty good anticipation that those supplies might be needed down the road. And we brought some more premium back into that market today.
You mentioned corn a little bit. I mean, I look at the board, 718 December corn, new crop corn. That's a pretty good value for new crop corn, John, at this point in the game.
It is very much so, but we got a lot of unknowns right now. Again, not saying that it's not a value and producers need to be on top of their game here. Again, you still got more risk to the downside here than the upside. So again, make sure you keep in those targets and move some corn. And then if you want to stay in the game, look at those option strategies. They're expensive, but at least you can have something over top to feel comfortable selling into. The biggest thing we still don't know, obviously, we had the USDA report last week. We didn't see anything change in the corn market at all in terms of supplies. Did get some inline shifting in terms of demand, which basically came out to a wash. But we're still waiting to see what happens in May. That's when we'll put the new acres into the balance sheet, get our first projections for 2022-23. We'll watch that report when it comes out the first part of May. Biggest thing today, too, obviously, we saw that Chinese demand. That's their second million metric ton purchase in 2 weeks. There's still anticipation they will be looking for more to replace some of those Ukrainian bushels they got purchased and aren't going to be getting delivered on. So that just keeps some optimism in that market. And even when you start thinking about those numbers out there, we're still trying to figure out where the demand's going to be. What's that going to look like for next year's balance sheet? And that's why you see the strength staying in those deferred contracts, December and later, just thinking we got to keep some premium in this market down the road.
Well, let's talk that soybean market today, John. I think there was a few factors at play there. We kind of reversed out of Friday's sharp gains. There was some spreading between old and new crop contracts, though, trying to maintain acreage, I would assume, with corn here today, but still plenty of pressure in bean oil with the drop in crude oil, and just the thoughts that there's going to be adequate supplies out there. It seems like. What's your thoughts with how the soybean market reacted here today, post WASDE report on Friday?
Yeah, it was a little bit disappointing to see the move that we saw today in the soybean market. Again, lots of little things, but nothing really seemed like the major contributor. I'd probably say that move in crude oil today, breaking down to that 95 and lower barrel per barrel price, was probably a big component weighing on that soybean market. Those two have been tied pretty much by the hip here in that regard. Obviously, like you said, this is a window. We're still dealing with a lot of Brazilian supplies. They probably still have the advantage of us in terms of market price here on the export front. So we're still seeing some business going that way. So it just has this market cautious. It's still a window where we can see some money move back out of the marketplace. I mean, realistically, we put that low in on, especially on that July contract that was down, 1560 area. We popped up here today, over a solid dollar higher on the open. Probably a good window. We saw some money just move to the sidelines as well. To me, the strength in the soybean market is still going to be those longer term. That's why we saw a little bit of bear spreading again today. At least right now in the short term, we got supplies out there. We're competing against South America for those bushels. They're winning that battle. So it's a little bit room for some premium to come out of that July contract versus November. Actually, like the fact that November kind of rallied off its lows, didn't get back in positive territory, but definitely showed some support. You start looking at those export inspections, they'll stay pretty decent for beans, as we got a lot of sales on the books here recently for old crop beans. But right now, we're the best value in town, basically from September into the 1st of 2023 for those new crop beans. And I expect that export business to continue to pick up as those importers are locking in those supplies out there against those more expensive South American bushels. That should help some support under those new crop bean contracts.
Now, as we move forward here into the middle part of April, we watch the weather situation in the U.S., but planters are starting to roll. Any thoughts, just grains wide, corn, beans, wheat, that producers need to keep in mind as they're entering a pretty busy time frame typically here across the country?
Again, as you guys get moving and get really moving, rolling around out there, it's very hard to keep an eye on the marketplace. Troubles in this market's going to be so doggone volatile. Even whispers already today that a little delayed part of this planning process here. The date May 15th got thrown out there. I saw in a couple lines today saying, after that day, corn yields typically start decreasing for later planting. So, we'll see. There's that chatter already. This market's going to be extremely nervous until we know we've got a crop in the ground and established and doing well. It's going to keep this volatility very, very high because, again, we don't know what those balance sheet numbers are going to look like for next year. And right now with the acres where it's at, even with a record yield, we could see the demand outpace supply. And that's some of the reason we got December corn at $7 plus. Let's not even talk about the fact we don't have any weather premium in for the summer. So there's still a lot of volatility in this market. So producers need to stay disciplined, stay focused on their targets, try to keep the information in front of you the best you can, because obviously as you get busy, you forget about the marketing side, but that might be some windows you're going to miss some opportunities.
Now, on that crude oil market, a little bit more, John, we see some more releases from the U.S. Strategic Petroleum Reserve. We got the lockdowns in China. Crude oil back to lows we haven't seen in weeks. We were down to 93 at one point here today. We're around 94 now. What's your thoughts with this crude market? If we continue to see prolonged shutdowns in China, is that going to help to drive this price back down a little bit, do you think? Or are we going to need a few factors to keep it on a downtrend?
I think we're going to need to continue to see more news. To me, this is going to be a downtrend that could find some footing here pretty soon. A little bit of technical selling also coming into play here. A lot of money poured into that market in a big hurry when we made that run up. So we'll have to kind of watch that. Obviously, the concerns with the lockdowns in China being a major factor in terms of demand issues. We're kind of maybe getting to a point, maybe the supply and demand is starting to work itself out a little bit here, at least in the short term. But I still don't think this crude market's done overall. We'll see when we get into summer driving windows, if we get some more movement there, when the lockdowns open back up, what happens there. This might be an area maybe we can hold this $90 barrier. If we go down and poke at it, we'll have to see if we can. If we do, we'll probably see some additional technical selling to the downside, which will spill over into the commodity space in a whole. But to me, it's a spot down here around this 90 plus area. I think this thing can hold here because we still have a lot of unknowns in front of us that still need to be answered. And I'm not sure if the market wants to, push it too much further, just taking that much value out.
Well, I know President Biden set to speak at an ethanol plant in Iowa tomorrow. I know there's been a lot of rumbling about E15 and things like that. We'll see. Doesn't sound like he's going to make any announcements regarding ethanol, but hard to say. We'll see what tomorrow brings if that plays into maybe our crude oil price a little bit if something major comes out there. John, let's switch over to livestock. We started today. Live cattle were a bit higher, but we were just kind of choppy in feeder cattle and lean hogs. And then by the end of the day, we finished mostly higher pretty much across the board. What's your thoughts with what you saw in livestock today? Go ahead, cattle or hogs, take your pick and start there.
Well, let's start with the cattle market. Yeah, it was a good close today. Like the price action, maybe just a little bit of resiliency here. Those two markets have been kind of beat up, the cattle, live cattle, and feeder cattle, especially since we got the USDA numbers here the other day. And obviously, we saw that jump in the corn price off of that, and that just has weighed heavily on the feeders, especially. We're down here at the bottom of the ranges, just trying to find some footing, consolidating. I think a big number we need to watch here is the June cattle trying to get through what we call the 200-day moving average. That's around that 135.50 area. I'm going to stay a little bit defensive on the charts until we get to that spot. Got to see what cash trade does this week. Maybe the storm coming across the northern plains might fire up a little bit of optimism on cash, even though we just haven't seen it. We get 138 last week again for the majority of the cattle, steady. What I find interesting out there, just talking to individual producers, I'm talking to guys that are getting 145, 144. They're getting solid individual numbers that's not being reported on the direct cash. So, at least it looks like there's some demand out there. Retail Packers got a good reason to. We're moving into grilling demand window. We got good strength in carcasses. We'll likely see hopefully that cash price kick in. But if not, again, these charts are still susceptible to some technical selling if we kind of break, back through the lows from the day. So I'll be cautious there. Same thing with feeders. Really good close today. We saw that grain market just kind of calm down this afternoon on the corn side, and you saw the money flow back into the feeder market. So maybe it's just a combination. Things are a little bit overdone there. To the downside again. Nice turn off those lows last week in feeders. So that was encouraging to see. And then we were holding them today. So to me, I'm looking at those September and those November feeders and August feeders felt a little bit undervalued, especially given the cattle numbers and some of the prices that we're seeing for live cattle moving out into 2023. So, a little bit of optimism there, but still cautious just in the short term that maybe we got some work to get through on that feeder side.
On the hog market, you feel like we're still maybe chopping sideways here in this trade a little bit, John?
Very much so. I mean, go look at that June contract. We basically can draw a line around 115, 113 area. That's what, 5 straight days we've traded through that area and held. Again, kind of like cattle, we got the 50-day moving average over top of that June contract. As long as we stay underneath there and consolidate, I think we're more open to go down to the 100-day, which is down at 107. Still got a lot of premium in that cash market or versus that cash market. April contract comes off this week, so that'll keep the market choppy. Then you got to sit back. May is not heavily traded at all, so you kind of focus on June. You'll get a $15 premium over the cash market there. Wouldn't surprise me if we go take out a little more of that premium first, then that market maybe will find some footing.
John, as well, looking over at the dairy market, what are you seeing there as we start the new week?
Again, good strength to start the day, or good, at least well supported. Trying to get that May contract back through $25. Producers need to be wary of where we are. Those are historically high prices. And to me, that's a market that's got a little bit of a topping action when we put that high in here about a week or so ago. It makes me a little bit cautious. I think there's some value there that producers need to be on top of here for sure. I'd rather be wrong putting some defense in at this point and watch prices go higher versus doing nothing and watch things do break lower. Because then that milk market wants to move around. It decides to do it very, very quickly, as we've seen in the past.
Yeah, a lot of things happening in that milk market. We'll definitely have to keep our eye on it. John, I know as well, there's a lot of worry about just inflation this week. Earnings are coming out. A lot of talk around that. I know the VIX is creeping back up there. The dollar index trading either side of 100. Any thoughts stock market wise or with some of this inflation worry that could affect our ag markets broadly here this week?
That's still going to wind up being the wild card in all this is what happens on the economic side of things. What happens in terms of the Fed and the movement. We've seen a movement in interest rates last week. It's putting pressure on the equity markets. They're down a couple hundred points again here today. A little weary that we could see a bit of a break it there. If we get one of those risk off sessions, the commodity market's vulnerable just because. If we see a hard break in stocks, we're going to see money move out of the commodities just to cover the margin calls in the stock market. We've seen that happen in the past both ways. So, those are still those black swan events that we can't, justify or just don't know when they're coming. And you got to be prepared for them somehow. Just don't fall asleep on some defense here in this marketplace with prices at these levels. Even if it's not great, it's better than nothing. Again, like I said, with the milk market, I'd rather watch defense go worthless and prices keep climbing here versus having nothing in and then $1.50 later, we're trying to figure out what happened to our price in corn and what happened to our prices in beans. Versus, again, having nothing at all. This is another one of those cases where the cost of doing nothing might be a lot cheaper than the cost of doing something might be a lot cheaper than the cost of doing nothing.
Well, I think that's a great way to wrap up the show today. Great thought there for producers to think about. And John, if folks need a little advice, need a little extra help, they want to talk to you or the team there at Total Farm Marketing about their marketing plan, I know they can do that very easily, can't they?
Sure. Love to talk with them anytime. Feel free to reach out. Give me a call, 800-334-9779. My email is johnh@totalfarmmarketing.com. And again, don't forget our website, totalfarmmarketing.com. Again, a lot of great information for producers there. Feel free to give me a call or shoot me an email. I'd love to chat with you, even if it's just got some general questions about what's in the marketplace and some ideas that we can put out there for you, and then just go from there.
John, appreciate the time as always, my friend. Thank you for joining us today, and have a great week. We'll talk to you next week.
Sounds great. Have a good week.
John Heinberg with Total Farm Marketing, our guest today on Market Talk. That's going to do it for this Monday, April 11th. Find us, markettalkag.com. I'm Jesse Allen. Have a great afternoon.